Interesting price action today. Let's go over the results. The hypothetical results I did not trade today. I'm waiting for a drawdown in this 250K portfolio. Hypothetical plus 3350, 50K. Hypothetical plus 670. Yesterday was a no trade day because we're not trading on FOMC. We went over the hypothetical results yesterday as well. I'm going to go over some more results, but I want to go over the market, the trading system signals, earnings, and what's interesting about this market today is that you can almost see this coming as the market started to go parabolic right here. You know, you're coming into that 2 o'clock hour, which is exactly 24 hours from the FOMC release yesterday. And so I thought to myself, it would be interesting if the market hits that equity peak in the market, that parabolic move, and right at 2 o'clock, it will reverse. I anticipated it will reverse. I didn't trade that, but the market did. I'm constantly looking for symmetry in the market, and the market reversed about 250 points on the NASDAQ and a good 50 points or so in the S&P. And then at the end of the day, we had this surge in earnings, and then it sold off again. And so 3 days in a row, you see a resurgence in earnings. Here's the after-bell surge yesterday. Here's the surge on Monday. The market's trying to act almost like an out-of-control runaway bull market all of a sudden. It's pretty interesting. The FOMC yesterday really gave the bulls energy and certainly did not anticipate these kind of trends in the market, although this day ends up looking pretty choppy overall. The strategies were up about 10K right here on the 250K portfolio, and so we were waiting for a drawdown. Typically, we see about 3 or 4 days at the most of equity peaks in a row, and if you count the FOMC day, we're at 6 days in a row on equity peaks. And in 2022, there's only been about 4 equity peaks in a row. So that's one of the reasons we paused, because we've seen choppiness right around when we make equity peaks. We see extreme challenging trading hit the market, and this time we have had an extra surge, and so it's up today about 3.3K, and based on our portfolio, we didn't trade yesterday, and so the yesterday was up about 4.8K if you traded on Fed day, but we're set up to not trade on Fed day. So we're still waiting for a drawdown. That is our strategy to reduce volatility. And so while this portfolio is at equity peaks on a hypothetical basis, it's about 7K off its intraday equity peaks. And so we're talking about closed trade and open trade. Open trade equity drawdown is about 7K, even though the portfolio is at hypothetical equity peaks now 6 days in a row if you count the Fed day. And so interesting price action. What's also interesting about this price action today is the NYSE tick. It trended down while the market moved higher. It kept making highs. So massive divergence between the broader market NYSE tick and the S&P and the NASDAQ. S&P is 500 stocks. NASDAQ 100 is 100 stocks. The tick represents 3,700 stocks. And so the broader market was trending down while you get these parabolic moves in the S&P and the NASDAQ, the narrower indexes. And then it sold off. The tick sold off. And at the end of the day, they surged again. The market surged again. And then it sold off. There was Amazon, Qualcomm, and Google are the big earnings news today. Let's look at those because you want to take a look at the price action here and understanding our diversity of exits. So today, our tick pullback strategy gave back a lot, almost all of its gains, while on previous days, hanging on to it after 4 o'clock was a benefit. And so it's just that diversity of exits in the cycles. It doesn't always work out. So some trades exit early and some trades exit late. And so the NASDAQ is highly influenced by Amazon, and you can see the initial surge like you saw in the NASDAQ, and then the continued selling in the after hours. And so if you interpret earnings reports, you could do that. I guess the initial belief was that earnings were positive, and then maybe once they dive deeper into the report, earnings are negative, forward guidance and all that. I'm not going to go over that, but you have Google, Qualcomm and Amazon, which are big Nasdaq strategy or Nasdaq equities, and so affecting the stock indexes at the end of the day. The day session is now closed, but in the 24-hour session, I see the Nasdaq trading at 12,673. So the Nasdaq is down here now, down below these lows, and so I thought this is an interesting day. Let's go over the trading system signals for the hypotheticals, and you see Cobra 3 market surged here, then rolled over and was stopped out, down on the day. The S&P strategies were 0 for 3 today. Tick fader lost on the day, got a short trade going here. Momentum reversal tried to call some turning points. This market is just highly imbalanced between long and short still, and there's still a lot of liquidity in this market. There's still this euphoric dip buying. It never really left, and so the bulls have just continued to remain energized. We haven't gone through what I consider a painful panic selling, throw in the towel, bear market yet, even though we saw a price readjustment in 2022. Momentum reversal, tried to go short twice today on the S&P, lost on both tries, and so in a normal market environment, you typically see over time, you see there's a time when the longs do well, and there's times when the shorts do well, but the imbalance of how well the longs do versus the shorts in this market environment has been still extremely balanced. Since June, this market is trading higher and difficult to short. And Viper went 2 for 3 today, but down 75. Has a $600 profit target, $1,200 stop loss, so right around break even. Minus 75 represents 3 slippage in commissions. Tick count trend, profit target on both of those. It was up on the day. Tick pullback, you can see it was up on the day a little bit by about 500, but up much higher, up about 4,000 per contract. And oftentimes when you try to make these strategies better and lock in those profits, the overall returns get worse. And in a portfolio, you have the diversity of exits. Some of these have profit targets, and some of these we let them run, and that's the intention. If you try to make all these strategies optimal without a diversity of exits, you don't have the same diversity in your portfolio, and your overall results are not as good. And so Cobra 3, Nasdaq hit its profit target. Tick reversal hit its profit target on the 2023 version. 2022 version hit its profit target. And so you're at equity peaks again on Cobra 3, Nasdaq, tick reversal, 2023 and tick reversal. EVP1 lost on the day. Momentum reversal, Nasdaq did not trade. Tick pulse, tried to go long, stopped out. Tried to go short, stopped out. And so the Nasdaq strategies were, there was 1, 2, 3, 4, 5, 6, 7, 8 strategies that traded. And let's see, 3 were losers. So 5 for 8 on the Nasdaq, with 3 of these at equity peaks. Cobra 3, tick reversal 2023, and tick reversal are all at equity peaks once again, because these had profit targets, and so these hit their profit targets, while something like tick pullback, is there for the mega move, and so sometimes you give it back. But that's diversity of exits, that's portfolio diversity, and that's what we're trading. And those are the trades, hypothetical trades. Once again, we did not take these trades live. We are waiting for these strategies to go through a drawdown. It's been on an extremely hot streak, 6 equity peaks in a row, and so that's not typically what we see. Tomorrow is Jobs Friday, so I will phase in on a $10,000 drawdown, and if that happens intraday, I may phase in intraday on a $10,000 drawdown. And so try to send out notifications. It's hard to sync up with me if it's an intraday drawdown versus an end of day, but I will do the best I can to notify you on those. And so once again, trading system signals for February the 2nd, 2023. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.